Good evening, good evening, good evening. Hello, everybody. Hello, everybody. Mm-hmm. Not sure what's going on with that, but let's figure it out later. I hadn't had a problem going live on X, and now it's saying it doesn't want to go live. So let's figure that out. Hey, everybody. We're live at 5. Going to talk about what's coming up this week. Earnings. We got lots of earnings this week. Oh my. Going to talk about current events because we've got current events happening. Current events that may cause some issues, which we don't want that. Right? We don't want that. I don't know why that's not. X doesn't want to go. Okay. I'm not going to worry about that. Not right now because we got stuff to do. I hope everybody's having a really good day, a really good evening, really good day. It's been a good weekend. I got to spend some time with some of my grandchildren today. So that was good. That's always a fun time. Well, mostly a fun time. Usually it's fun time. Grandparents, we get the best thing. We get to go and we visit for a little while. And when we're done, we take them right on back home. Take them right on back home. Get to enjoy them and take them right on back home. That's how that goes. Yes? Y'all agree? I agree. So I'm giving Facebook time and YouTube time and Instagram time to tell all the people that we're here, for our regular live at 5 on Sunday. Welcome to the Teller Zone. Welcome to the Seller Zone. I need to get me a sound bite so I can use that. Janae is the one who came up with Seller Zone, and it's got a nice ring. I must say, it's got a nice ring to it. Hey Tanya. Hey Tanya. I hope I did some church today. I actually did church yesterday. I do. I'm not 7-day Adventist, but our church has a service on Saturdays. So I did Saturday night service last night. I always enjoyed doing that. And hey Stacy, hey Marcia. So that's what I did last night. And I told you I spent time today with with some of the grandkids. Trying to think of how old they are. So the youngest we were with today, I want to say she's got to be 5. Maybe she's 5. And then her next older brother is 3rd grade. So what's that, 8 or 9? And then we had a big old teenager with us. He's 17, 18, going to the 12th grade, their bigger brother. All right. So anyway, this past week has been interesting. It was very trendy last week for all the volatility that we had. We definitely had a lot of one-way motion. Even though we had lots of trend, lots of volatility with CPI and PPI and unemployment, we still had lots of volatility that came in, but we trended. Notice this is SPX for last week. So the S&P 500 for last week is right here. Hope y'all can see that. I believe you can. Hey, Karen. If you've got some stock you want us to look at, go ahead and start putting those in the chat, though. I'm going to go through our whole watch list this week, but I want to make sure that if anybody has something else they want to see, that we include that. But this was last week. The high and the low. High was 56.55 and the low was 56.62. So it looks like it's a lot, but it really was only 7 points. 55.62. That's more like 90 points. Got to get your math together. I was looking at the other 50. So 55. Okay, let me get it right. 55.62 was the low. And 56.55 was the high. So that's about a little bit less, a little bit more than 90 points is what it did last week as far as high to low in the motion. But open and the close was 55.72 to 56.15. So that's more like 40 points. The open and close really was about 40 points away from each other. Let's go to a smaller time frame. We're going to look at the daily chart. Shows what happened each day, right? This was Monday, Doji Day, which Monday, got to wait and see what happens next. It went outside to the upside, but then came back down. So this was basically another Doji Day on Tuesday. Wednesday's where we got motion because of the CPI was Wednesday. I think Powell spoke Monday and Tuesday. I believe he spoke those days as well. I could be misremembering the days that he spoke. It might have been Wednesday, Thursday. Anyway, this is Wednesday, this green day. Thursday was an engulfing red day. Basically, this was a 2 up and a 3 outside day was a 3. And then on Friday, we popped out going to the upside, but it didn't go what they call enforce. It didn't do that. So it stayed on the, it went up, 2 up, but it didn't stay up there. It didn't close up there. Let me put on a little trend or broadening formation here. So because when we go to a smaller time frame, we're going to be able to see what this looks like. Okay, there's a broadening formation from there. And I'm going from the top of this one to the top of that one. That's a broadening formation, which actually we can go to the top of that one, to be honest. I think I'll leave it at here because that didn't close up there. So there we go. That's a broadening formation from the 2. Or actually, this would have been a 2 or 3. So let's go now and go to an even smaller time frame. I want to make sure I'm changing it to 4 hours, but I don't. There we go. We're doing good. We're doing basketball. Basketball. Ooh, let me see which one of these strats I want on. No, I don't want that one with the boxes. Yep, I want this one. All righty. So there we go. This is what happened last week in SPX. All right. Hey, Janae, I just mentioned your name a little while ago. That Friday candle is a shooting star. Friday candle. Let's wait to the daily. Yep, it is. And shooters generally go this way. Generally, shooters go down, which, according to current events, that may definitely be coming, right? This broadening formation that I drew from a high to a swing high, from a low to a swing low, basically low to a low, basically a swing low where it went lower and a high where it went higher, showed us now how prices stayed right inside this formation. So the thought would be that it would now come on back down out of here and manage from there. Okay, this is the 4-hour chart that we're looking at here. Looking at the 4-hour chart. Let's see if we put some lines on it for those who are trading SPX. And we do have people who are, because now that we're using the Peakbot alerts, we're also getting a little bit of help. Getting a little bit of help with strikes if you're using the Peakbot alerts. And hopefully you are. For $5 a week, you can get alerts that tell you exactly which strikes to use for iron condors. It's 1 DTE, but you can use those. All right. But this is what happened last week in SPX. All righty. So what happened last week? Do I want to continue from there? I don't think I do. Oh, you know what? I do want to go. This is what we need to look at right here. Is this monkey that went bananas? That's what went bananas is IWM. Like, bruh, where are you going? But my understanding is this is the Russell 2000. And where people are starting to move their money maybe out of some of the big tech areas and they're moving it into smaller caps. And Russell 2000 falls into smaller cap. Yeah, so this is what IWM. I had a nice little run going with my iron condors. Y'all see all this consolidation that was going on all this time? All this time was nice little run for my IWM iron condors. And then last week, IWM was like, not so. You will not confine me to this little consolidation zone. And it got on the move. But speaking of shooting stars, this one here from Friday, not last Friday, Friday a couple days ago, is also a shooting star. And it's got now some gaps that need to be filled. It's left some gaps in the wake. And we do know that gaps want to be filled. Okay, so we've got this gap that needs to be filled. Put a little note in here. Gap fill. And we have one down here that is going to want to be filled as well. So now IWM can go on back and grab them. I will ride along with you to get them filled. Okay, yes, I will. Yes, I will. I will ride to get them filled. I think these two gaps down here are done. I think we showed these gaps. We were talking about this different call. And these gaps were here and showed up, but they've been filled by this price action from Tuesday. Tuesday's price action filled it up. Okay. Let's see where IWM is going. Does it have a place it's going? Do we see some resistance? It actually is now above this resistance 1, and it went to resistance 2 and turned back. But let's see. Do we see some resistance up here? Let's get a higher time frame. Maybe I can pull in more data. Okay. We do have some. You see what happened here? I'm not sure if y'all can see where my mouse is. Back here in January, there is a gap back here that needed to be filled. From January the 10th to January the 18th. So jumping, this is the weekly chart. So on this weekly chart back here, that gap from January was not filled. But you know what? It's filled now. That's where gaps get filled. They may not get filled in short order. They may not get filled the next few days, but y'all see it came right up to this gap and went through it and pulled back. It didn't pull back to the bottom of the gap, but this gap now from January the 18th to the week of January 10th to the week of January 18th is filled. This one before it got filled already. So we're here at the place where this is the top of this gap definitely was resistance. And if we look back even to January of 21, this area still provides some resistance, even back as far as that. So could it turn back? Absolutely. Okay, let's go to the daily chart. Because IWM just was like, I'm finna go. Y'all sat around, but I'm finna go. And it went. Like y'all gonna wait around on me. I'm finna go. Let me I'm gonna go ahead and take this gap off because it's filled. No need to keep a gap there that's done, son. It is filled. Okay. So that's IWM. Yeah. Now we need to watch and see what it does with this gap fill that's below it. What's the bottom of that gap? 211. So now it may go back down to 211, 210, 91 to try to get that filled as well. But you want to be careful. Jamie says that this Friday, 7/19, is double witching. It's basically where the monthlies expire. Obviously, the weeklies expire. We're probably going to have some bonds expiring. I mean, those are the things that happen on the third Friday of the month, and that will be this Friday. Many times the third Friday of the month is a bearish, like the third week can kind of be a bearish week because people are closing positions that were on for the month and resetting. So it may be bearish, whereas you kind of pull back earlier through the week or whatever. And then generally that Friday, it almost always happens, the price goes back up again. It gets bullish. So again, that's not investment advice. I'm just saying that's what I've seen happen. I've watched it enough times to see it happen that way. Okay. All righty. So that's IWM that we wanted to see. The rut is the same thing. SPX, XSP. I think that's good here. I think we're good there. Okay. Let's go look and see. Well, first of all, let's talk a little bit about what's going to go on in this here calendar. What's going to happen in this here calendar. Okay. So Monday, we've got Empire State Manufacturing Index, which is a red folder. Powell is speaking Monday morning or Monday at noon. not quite a morning, a little bit past morning. 12 noon, Powell is speaking, and the FOMC member daily will speak at 4:35. Market is closed. But of course, Powell speaking is a red folder. On Tuesday, core retail sales month over month and retail sales month over month. Red folders at 8:30. That's before the market opens. Import prices month over month. 10 o'clock, we've got business inventories, National Association of Home Buyers, and FOMC member Kugler will speak at 2:45. On Wednesday, we've got building permits, orange folder, and housing starts. Those, of course, are important because if people aren't doing building permits and housing, then guess what? That's a piece of our economy that's important. And people not starting houses and not getting permits lets them know that people aren't putting their money there. Okay. FOMC member Barkin will speak at 9, industrial production at 9:15, capacity utilization. FOMC member Waller will speak at 9:35. Crude oil inventory at 10:30. 2 o'clock is the beige book. Even though the beige book doesn't have a red or yellow folder or orange folder, there is a book that comes with it called the red book, and that book will have higher volatility. All they put on here was beige book, but at the same time the beige book comes out, there's a red book that comes out. Okay. Thursday, unemployment claims at 8:30, Philly Fed at 8:30, CB leading index, natural gas storage. FOMC member Logan will speak at 1:45, and then we got some stuff happening after the market closes. And then on Friday, we've got 2 more FOMC members speaking. So it looks like we have a red folder every day but Wednesday. And even here, we've got an orange every day but Wednesday. We've got, Friday didn't have one. On Friday, we only have 2 people. I skipped right over that. On Friday, we have 2 FOMC members speaking, but we have no other data folders that are happening there. So 3 red folders this week and an orange, a few orange folders, some orange folders. Okay, so unless you've been under a rock, you do know that there was an issue yesterday where, this is the issue you can see on my screen. So I saw in a post, let me see if I can find the post, but I saw in a post by, I saw in a post, let me do something real quick. Hold please. Hold please. Nope, that's not where I wanted that to go. Cancel. I saw an article where the person, direct messages, talked about what happened the last time we had a situation like this. Last time we had a situation like this, there was basically there was a lot of drop in the market as a result. Okay. So people, I guess, don't take too kindly. They don't take too kindly to issues with people's lives, which I think that's real. I think that's real. So the last time this happened was with Reagan. I was trying to find it. The last time it happened was with Reagan, and the market fell sharply as a result. So keep that in mind as you're, planning and doing your things. Just keep that thought in mind, okay? That it could be a thing. Could very well be a thing. Google reportedly in advanced talks to acquire cyber startup Wiz for $23 billion. It's the largest ever deal. I don't know who Wiz is. Somebody who's on the call, look up Wiz so we can see if they've got stocks or options. Because of course, if Google's talking with them, they're probably going to start making some moves. Move it. I want to move it. 4 stocks I would keep to buy now. Google advanced talks with Wiz. Why the job market has been a bad match for college degree and recent grads. Earnings playbook. This is a big week for earnings. So, okay, we can go on from that. Somebody looking up Wiz. Jamie, are you looking it up for me? Para mi. No, para ti is for you. Para mi is for me. Okay. Big week in the earnings arena, right? Let's see what we got. Now, we know banks started off on Friday, and we're going to have them keep their running. So Monday morning, we've got Goldman Sachs, BlackRock, and Guarantee. Okay, Bank and Trust. Monday after close, First Bank, Somebody First Bank is there. It's a First Bank and then Somebody First. I can't see what it says. And then Service First Bank. I got a way to do this. I got a plan, Stan. See if I can get it where I can see it better. That's not that isn't any better. Let's see if I can get on a bigger screen. Then I can see what I'm looking at. As soon as you pull it out and make it like big to see, then it gets all dissipated and such. Okay, bring this down. I didn't want to go there. Nope, I'll go back here. There we go. Add to the stage. I'm not sure what the second. Maybe it's cross first. Looks like the word might be cross first. Service First Bank is there. Then on Tuesday, we got Bank of America, United Health Group. UNH has been getting a lot of, I want not the word heat. A lot of people have been focusing on them. Let's go with that. People have been looking at, they've been getting noticed. All right, UNH has been getting noticed. Progressive is here. Morgan Stanley, Charles Schwab, PNC, State Street Bank, Angio Dynamics, Mercantile Bank. All of those are Tuesday morning before the market opens. All right. After close on Tuesday, Interactive Brokers, JB Hunt, AEHR, Hancock Whitney, Great Southern Bank, Fulton Financial, Equity, Bank Shares, Pinnacle, Omnicom Group. All of the banks, Monday and Tuesday. Wednesday, ASML, which I think ASML is tech. I feel like that's a tech name. Johnson & Johnson is Wednesday. Elevance Health or Elevance Health. Ally, Prologis, Synchrony, the people who run Sam's and that bank, they run the Sam's cards and stuff like that. Bank Corp, First Community Corporation, First Horizon, and Northern Trust. More banks. Wednesday after close, United Airlines. I had a United Airlines trade that I turned off the other day because it was frustrating me. And I bought they probably going to pop this week. Anyway, Alcoa, Discover, Kinder Morgan, Crown Castle, looks like Steel Dynamics, GSL Green, Equifax, First Industrial, and Liberty. On Thursday, TSMC or TSM, Taiwan Semiconductors, we know is tech. Wiz is a privately owned company. Thank you. Nokia is Thursday morning. Centis is, I think, the uniform people. Domino's Pizza is Thursday morning. DR Horton, the houses. Abbott, the Black something group. Blackstone, maybe? Does that say Blackstone? Maybe it says Black Street. Sorry, I'm trying to make it bigger so I can see. Infosys, KeyBank, and Marsh McLennan. There we go. Marsh McLennan. Netflix is Thursday after close. I should go back and tell Netflix to give me my money. Intuitive Surgical, PPG, Ocean First, AAR, Metropolitan Commercial Bank, SB Financial, Alpine, Scholastic, the Reading People. I know they had stock. RGP is there on Thursday after market close. And Friday, we've got American Express, SLB, looks like Budget, somebody, Auto Live, Fifth Third Bank, Halliburton, Comerica, Travelers, Huntington, and Regions. So lots of financial places this week. Lots of financial places. And just know that these financial places do push the market around. They push the market around. Okay, so may not be as big like the Amazons and the Nvidias of the world, but they're going to move the market around. I believe that AVGO is going to split on Monday, but some other ones are going to split also. If you know who else is going to split this week, put me in the comments. I believe AVGO will split this week. Didn't want that all in caps. Who else is splitting? Do y'all know? Randy put a video in our Facebook group But I didn't watch the video, but I did see that he put it there. Maybe somebody else watched it to see who else is going to be splitting in the near future. Okay, so the trend spread Peakbot alerts. Last week, I wanted you to know some results from these previous weeks. Last week we started using, was it last week before last? I want to say it was last week, maybe the week before last. Anyway, we started using, maybe July 1st, I feel like it was the first, started using the Peakbot trend alerts and those iron condor alerts, right? That are coming. Well, the watch list is open all day. So, and it updates every 5 minutes. So I was doing some trades off of that trend spread list. And last week, for the week of 7-8, I did 11 trades. I did MU, Micron, Uber, TSM, NVIDIA, Exxon, Dell, and TQQQ. Those are the ones I did last week. Of those trends, of those credit spread trades I profited $137. And one of these actually got breached. Dell got breached by about $73. So if it was, if I hadn't lost that Dell money, I'd have been at $200. But, I literally cannot win them all. And you need to always know that you may not win every trade. But I profited $137 using $1,100 of collateral. And that's a 12.5% profits. And that is coming, these results came from this list, 8 out of 12 profitable trades. They didn't come from this list. I'm saying that because my mind just went someplace else. That's why I just popped that out there. It came from not this list. It came from a list like this. Oh, there we go. Came from a list like this, right? Where every day you're seeing all day long the trend spreads here, and I'm getting hot, so I need to turn on my fan. No. Lord. No, and no. Hold on, y'all. Other screen is acting. Hey, Abra, you woke up from your nap. Welcome. Welcome. Okay, work with me. Screens. Anyway, the trend spread alerts come. Hey, Saida, they come here, and it's on a watch list, and the watch list is available all day, and it updates every 5 minutes. So you could see which ones of these you like. I asked a question yesterday about how are these things put in order? How do we do the order here? How do they get in order? And I was told from the expected value. Let me make sure I say it correctly. Okay, looks like it comes from. Is this the right place? Yes, it is. The expected value. Expected value is the estimated average outcome of a series of trades if they were repeated many times. It represents the average profit or the loss you can expect on each based on the probabilities and potential outcomes the current trade set up. Okay, positive EV equals good, negative EV equals bad. That's how the list is sorted. It's sorted with the expected value or the EV, and that's how you get 1 through 10. So these are credit spreads, though. These are credit spreads, flat one side. So if you got the sell the put side, if it's blacked off, they're telling you to do a call credit spread. And if the call credit spread side is blacked off, like on NVIDIA, then they want you to do a put credit spread. Basically, they're going to help you with the direction. It's called a trend spread. It's the trend. It's going with the trend. And then you also have these iron condor. You have these iron condor suggestions for trades for the indices, IWM, SPY, XSP, QQQ, SPX, and NDX, which it was acting up last week, but that one has been fixed. So, but this is what I was doing in these, but I want you to know that the alerts are coming. right? You want to capitalize on those alerts, right? But what you're going to need to capitalize on the alerts, you're probably going to need to know how to do credit spreads. You're going to need to know how to do credit spreads. So because I've been promoting this or talking about the different spreads and showing the results of our list of previous weeks, like I'm going to show you the results of our other week. This right here. We had 8 of 12 profitable trades last week. I had 12 trades on the list, and 8 of those were profitable, like 100% profitable. You see that we had a few like Google, Pinterest, and TSN or Tyson. Those were partially breached. So the price closed in between the two strikes. I think like Google closed at like 186 something. So that wouldn't be a max loss, but you wouldn't keep all your profits either. And then there was one trade, the one Datadog, that was completely breached. That was the only one that was a total breach. But we had a 67% win rate last week, right? So I'm putting this out on a weekly basis and then following it up with results and that kind of thing. And I've just mentioned that we had these are the results of the trades that I took in with the trend spread bot. And as you put these kinds of, put things out like this, people then are asking, how do I get in on that? What do I do? So I'm going to have a credit spreads masterclass. It's going to be on Saturday, July 27th. Many of you who are here may be in my community, not something you'll need to get in on or pay to get in on. If you're already a member of mine, then you don't need to pay for this. If you're not a member, you need to go to educatortotrader.com and get registered. I am offering, though, for my community and whosoever else, $20 for each person that you bring that registers based on your recommendation. That's a good little way to get you a few little, some coins, get you a few coins. $40 will fill up some people's gas tanks like mine. $40 fills up my gas tank. By the way, don't be jealous that $40 fills up my gas tank, but it does, though. It's just less than 40. It's more like 35. But the point is, go ahead, tell other people about the credit spreads. Help folks. And this is going to help you. Number one, it's going to help you be able to utilize the list that I just put out, that I put out every week. Number two, it's going to help you be able to use the alerts if you want to use the alerts list. Number three is going to help you grow your account. You're going to be able to consistently grow your account, which is what people are after. We ain't really trying to figure. People want to know, what is the best way for me to make money and grow my account consistently? That's what we're looking for. Yes. So this is going to help you, and whosoever we suggest is going to help them grow their account. All right. That's what we're after. So if you know some folks, pass the word. Pass it on, pass the word, and let them know that they can hop on in on the credit spreads. It's going to be Saturday, the 27th at 11 a.m. All right. I did want to share with you what our list is for this week. Our list for this week, what I did was I always take the Peakbot watch list and I look for the lower risk area, the put credit spread, call credit spread. There was just these two on each side. Okay. And then for the iron condor, I went down to the moderate risk area for the iron condor because I wanted to be able to have some iron condors on our list, because y'all know I love a good iron condor, but I wanted to have those on our list. But I think one of the reasons why our list is so small this week is last week was crazy. First of all, there's a lot of trending stuff that we had a few up days and some significant down days on Thursday. And the watch list is looking at the 67-day moving average and when to determine trend. So if it's a lot of movement, now there was a lot of stuff on the watch list. Maybe I'll show you. There's a lot of stuff on the watch list that is down in the red area. The watch list was the same length. It's just much of it was down in the higher risk area. And, that's not how I get down. I'm not going to take anybody into the danger zone with me. I will go because y'all already know sometimes I can be a little too aggressive and then I fuss with myself later. But I wanted to show you this watch list. Okay. So the watch list you can see here in the middle of the screen. So we got 2 on the green area. We got 2 on the lower risk for put credit spreads, 2 on the lower risk for call credit spreads. And then it jumps right to moderate risk. Here in the middle, you see moderate risk. Now the moderate risk, come on, roll down with me. Roll with it, baby. The moderate risk is a lot longer list. Y'all see this? Lot longer list is happening on the moderate risk. On the bullish side, and come. Come on, baby. Oh, it does this regularly. I want to wait. I will wait for you. Okay, so then we got neutral. These are the 4 I took off for the neutral, off of the moderate risk list. Okay, I'm trying to scroll down so I can show y'all all the red that's on this watch list. Come on. Yes. I might have to say never you mind, because you've taken too long and the people are waiting. Still waiting. Okay, so you see Taiwan Semiconductors, Carvana, Alcoa, Palantir, TQQQ. TQQQ actually stays down here. Even though I've used TQQQ week after week, it is done well, but it's down here in the higher risk area. So you could definitely trade off this list. Just know, see how long this high risk list is. It's a lot longer. Coinbase is in the neutral, Shopify, Alibaba, Caesars, United Airlines. Yeah, all these are all in the high risk area. And I never suggest high risk. And the only reason I put moderate on here is if I don't have any neutrals from the low risk. So that's why you see these 4 moderate risk, because there are no neutral trends on the lower list. That's how that goes. That's how I do that. And I take this watch list and then I go from here and I select the strikes. They put strikes here. I don't necessarily follow those strikes. I'm not saying that my strikes won't match some of theirs, but I don't necessarily follow their strikes. So actually, I think I came up with something different for Amazon than they did. They went down to 187.5 and I'm up at 190. Now they use the 30 delta. They pull in the 30 delta, which that works. And I think if you look at 30 delta, really my number is over 30 delta, is under, much more under 30. Anyway, we're going to go over these stocks, if that's all right with y'all. These are the ones we're going to go over. If you got something else you want us to go over as far as the stocks go, then let me know. Let me know. Let me know. Okay. I'm giving y'all a minute. And then we're going to go to the screen where the chart is. Okay. Are we at, where did my trading view go? There it is. Did I get rid of it? How did I lose my trading view? There it is. Tanya said she want to look at Google. Did you get out of your Google before you got breached? Last week I was doing the iron condor. I was doing the iron condors on some of the ones. Triple Q was one that the bot does. Peakbot does it for me, automatic, hands-free. So I had that one going, and I also tried IWM and got breached with that. So I've made some adjustments to my trading plan that I shared inside of the membership. I made some adjustments to the trading plan, and that the adjustments are that I will close. I'm set to close, but I've always closed my credit spreads at I always close my credit spread at about 50% anyway. So I'm going to continue to use that even with those, even with the iron condors, I'm closing it at like 50%. And if it goes the other way if the trade is not going in the direction or the one side is getting breached, because iron condors is a neutral strategy. Iron condors is neutral. So if we're at the place where, this is the daily chart, if we're at the place where I've lost my train of thought just that fast. Oh, if it's at the place where the trend is going towards and it's going to maybe breach my trade or whatever, and the value of my trade is going up, I'm closing at like a 2x. 2x meaning if one side of that iron condor received $25, for example, if that same side gets to be worth $50, I'm closing that side of the trade at $50, because I'm taking in for the iron condor, I'm taking in about $54. So if I can close one side for $5, and if the other side just goes breach and I close it for $50, I'm still at break even for that trade, right? It didn't go red. And if it does what it's supposed to do, I'll leave it alone. Okay. Janae says 50% means you get half the premium and get your collateral back. Yeah. So 50% being, let's say, if I receive, I'm going to say $50 for the iron condor. Yes, for the iron condor, then I'm going to trying to type and talk. I'll close it for $25. I'm closing it for 25 or around 25. If it'll close for 20, that's fine. Usually give $1 or $2 because I want to get, the money for my fees. I'll close it for about 25. If I received $50 for the iron condor and I can, out of that iron condor, leave with 25, that means I kept $25 in profit. That's a 25% return on the collateral. The 50%, $50 taken in puts you at a 50-50, like a 1-to-1 risk to reward. Like if it's a one spread and I receive $50, then my max loss is $50, right? So if I close that trade for 25, then I'm keeping 25 of those dollars, and that's a 25% return on collateral. I'm cool with that, right? But if one side, because if it's going towards one direction, the other side is going to close worthless. So I'll let that close at $1 or $2. And then the other side, if it doesn't want to stay below $50 or below twice what I received for that side, then I'm closing it and I'll make it a break-even trade. I'm cool with that. I'm cool with making it a break-even and keeping it from going up to, max loss or anything higher. Janae says, what's a good close amount considering someone has to buy it back? Is $10 okay? Or talk about the scenario, please. Yeah, so $10 would be fine. My thing is this, it's two pieces. So if you take in 50, and I'm going to say 50 because when you do these iron condors, you take in about $50 in premium. It might be 47 or 48, and it might be 53. I mean, you're going to take somewhere around $50 in. So if you want to set the entire iron condor to close for $10, that's fine, right? So that means you're keeping $40. You received 50, you're going to buy back for 10, you're going to keep 40. Sometimes though, like especially this past week, what happened is one side closes at worthless and the other side, running toward the moon. So not the moon, but y'all get my point. The other side is running. So that side ends up getting totally breached. If you leave it, it could be totally breached earlier in the day or get totally breached as the day goes on. There's no reason to sit idly by watching Triple Q continue to climb if it's already through your strikes. You might as well close that off. And because you're going to enter again for the next day, because this is a daily thing, you're entering today for tomorrow, so it's 1 DTE. You're going to take in another $50. There's no reason to sit idly by watching your money fly out the window for a scenario, for a trade that's getting breached on one side. So I want to see if I could, I don't know. Let me see if I can, I'll type it right on here because that'll work. I'll put it right here. So let's say you enter iron condor for $50. Okay. The next day you set close orders for PCS and CCS for, originally you set them for $5, right? Originally you set the orders for $5. I actually do this like in the morning before the market opens. I will put on the close orders for those particular sides because the iron condor, you're going to enter it. I enter them side by side, put credit spread, call credit spread. It makes it an iron condor. And then the next day I set it to close for $5. All right. Let's say a trending day. One side will close for the 0.05. One side is going to close for 0.05, right? The other side might be being breached. And I'm saying being breached because you're watching it do its thing. So, it might be being breached, which means the price is going through your sell leg. Okay. So then you want to change your close order to 0.5, right? If it gets, when I say 0.5, it's because if that side received $25, I'm gonna put a little note up in here. Let's say put credit spread receive, because you don't generally get the same thing on both sides. Let's say the put credit spread received 23 and call credit spread received 27. I'm going to go with that. It's generally not 25. Next thing you said the close orders for the PCS and the call credit spread for 0.05. One side will close for the 05 because the price is going one direction or the other, or they're both drawing down. The other side might be being breached. And if it is being breached, this is when I talk about that 2X. I would double whatever I took in on that particular side, and I'd set my close order for, I can do 46 for 46 or 0.54, depending on which side you're talking about. I just doubled this number. 23, I doubled it to 46, and 27, I doubled it to 54. And then that way you're closing the side that may be being breached, right? And you're going to end up with basically a break-even trade. You might pay a few dollars, but you're not going to pay too many. And you're going to be able, for the most part, you're going to kind of be able to see this happening by the time we get to noon or 1 o'clock. You're going to be able to see whether your trade is going to draw down premium like it should, or if it's just going to go one way. You've seen them. You can watch the price action and see, this is moving this way and it don't seem to be pulling back. So I'm just going to go ahead, cut off right here where it's break even, and then enter for next day and take in my $50 again. There's no reason to sit idly by till 4 o'clock if you don't have to, right? So these are orders. Let me put it around like this. These are the things that I'm going to do to make sure that I'm still taking in consistent premiums for the credit spreads. But if I see, we know enough to know, we watched the trades enough, we watched charts enough to know if it's going to keep going in this direction, if this trade is not going to recover. And sometimes it'll hit a resistance or support and turn all the way back. And I'm fine with that. Because on more days than not, it doesn't turn back enough to unbreach your trade. Now, if it's just dangling around your strike and you're watching your chart, then that's one thing. But if it's just moving, the wrong way, or the way you don't want it to go, save yourself, hoss. Save yourself, right? Get the benefit of the strategy, but then you're also going to see if it doesn't work out for you, you know that fairly early. All right. I sure hope that was a good explanation, Janae. And if not, we can talk about it. We're actually going to do a Zoom call after this. After we get off here, I'm going to go on Zoom and we can talk more in depth about that if you want us to. All right. I was looking at Amazon. So Amazon is showed up on the put credit spread list, probably because of all of this. Excuse me. It showed up on the put credit spread list. I did 187.5, 190 based on this monster right here. And we've got good support at 193 and some change. We're on the daily chart. Yep. So I did on the list, you'll see put credit spread 187.5, 190. Okay. Not investment advice, just telling you what I see. That's also 187.5, 190 is below this pivot point, this support here, support 1. So it's actually down here. It's actually down here. Nope, it don't want to move though, but it's down here. There we go. That's what we have for Amazon. Okay. I want to make sure that I can get my list so I can see what else is on there. Let's go to Google. We'll look. You're welcome, Janae. And if that wasn't all the way clear, we can talk about it some more. There's some people who do the trades on Peakbot, and you can completely hands-free, where you don't have to worry about, you don't do anything. That Peakbot enters and exits the trades completely automated, and it'll continue to just rinse and repeat it day after day. And because of the, as they call the law of large numbers, basically it says that if you continue to do this same thing over and over and over, the trending days are less than those consolidation days, if you want to call it that. So in the law of numbers, you're going to come out profitable. But you just happen, but usually what many times happens, which happened to some people last week, is you start, and the week you start, you get here, it's for the birds. But it just, because it just so happened that's the cycle where you picked up. But if you go to, you continue to do it, you'll see that it will be profitable, and it will be more profitable than whatever else. But it's hard to watch. It's hard to watch that when it's not necessarily doing its thing when you first start. It's hard to watch it, right? It's hard to just sit idly by. So that's why I put together what for me is going to give me peace of mind, right? Closing my credit spreads at 50% ish, it gives me peace of mind, and closing them at a 2x if I'm getting breached gives me peace of mind. I'm an active trader. I'm not necessarily looking for Peakbot. I do have Peakbot automated trading for my trades, and it enters perfectly. I still close those early. So, you want you to know that once you're using Peakbot for your automated trades, you still have total control of your platform. Peakbot does not take over. It will enter the trades you ask it to enter. All right. So, Tanya, I see here, if we're looking at Google, I also see we've got a trend line going here. Got a trend line. And I actually don't want that trend line there. I think I would want, because it needs to touch twice, and I don't necessarily want it to touch there twice. We got our trend going. I still would go with a put credit spread because it's here, but it pulled back. This looks almost like Amazon, but this Friday Doji Day, which kind of looks kind of shooter-ish, probably would make you a little nervous. I wonder if Google is on that watch list I mentioned. I wonder if Google's on that list. It may be down further on the watch list. Maybe you can look on there, Tanya, and see. It's usepeakbot.com/watch lists. Watch lists. I'm going to open it up too, but it may take a look. You know how I didn't want to move the last time. And it will see list where it falls on the whether bullish or bearish. That's going to help us a bit there. That'll give you a place to start, right? That'll give you a place to start. But from what I see, just by the chart I see, I would go with a put credit spread. Right, I see 186 and some change as a support area, basically right where it is right now. And if you wanted to go a little lower, you could go down to 181. You might not want to go that low. That's not going to be any fun down there. There's going to be no money down there. Where's my, okay, let me see. Scroll, baby, baby. Baby, baby, scroll, baby, baby. Oh, yes, Google is bullish. Google is here. It is in the high risk area for the week. And what's suggested here is 177.5 as the strike, which puts us way down here. Well, maybe because it's 2.5, maybe there will be some decent money. Put credit spread 175, 177.5. I kind of need to see what that plus minus number, not the plus minus, what the probability out of the money is for that plus minus number. Tanya, has Google been paying you pretty steady? Has it been working out for you real well? I know you said you wanted to focus on like one stock. I'm going to put Google on here and see. Let me go to single. I'm looking at my phone because it's just easier to get in here and see the numbers than it is. It's a plus minus number, plus minus 4.9. So taking 5 away from this puts us at like 181. So according to the plus minus number, you could go a little closer, or 177.5, 180. Let me go look and see what the 180 is as a, yeah, 180 is a 84% probability out of the money. So 84% probability out of the money is good stuff. I probably would go with this second one because I would want the premiums. I would want good premiums, right? Let me look at what now. Of course, the market is closed, so we're not going to see. Yeah, the one that 177.5, 180 is only paying $16. 182.5 pays $25, and it's actually 182.5 is actually 75% probability out of the money. You have to decide what you like. Gotta decide what you like. Now y'all know I'll just make up songs along the way because that wasn't a song. I just made it up as I went, right? As they went. Tanya says, been good. They do look alike. Yes, they do. Okay, so I had that. Let's go see what's next on our list. Nope, that's not what I wanted. I didn't want you. I wanted, there we go. Oracle, 140, 141 on the put credit spread side. Oracle. Ooh, look at this big old monster gap down here. Ooh, them gaps be calling you like, please come and get me. Please. I might need to make sure I put on my chart, put on me an alert when Oracle comes back down to go in this gap. 124 to 134, that's a 10-point gap. Even if it don't go all the way, it'll be something to roll through. All righty. So what Oracle is right now, though, it's showing as a put credit spread, 140, 141, which puts us, 141 puts us in here, which is a good place. I think that's a good place. We got touches here, even though not those. These wicks are touching in here. This was a resistance area here, and then it was support over here. This is continuation. So that don't count. So 140, 141. Does Oracle have any news coming this week? Does anyone know? Is anybody trading Oracle? I do see it trying, but this little stop up here, it doesn't seem to move past here. I'm actually, y'all know I be always looking for a good iron condor opportunity. But this right here, this whole sitting right up here waiting, and all this right here just in the same spot for far too long. Let me go see what it looks like on a weekly chart, because it might be setting up for a move. That happened to me on Exxon. Exxon, if I had looked at that chart, I could see that it was a one candle, which basically the one says it could break out either way. And I ignored that. But you see this, this is a weekly candle, and this is a big old sword. This last one, long wick, sings it wants to go on up. So that's probably why it's on the put credit spread list. So listen, don't go on the other side just yet. If you wanted to do the other side on a call credit spread, wait till later in the week and give it a chance to see what it actually does. Right? See what it actually does. 140, 141, I believe is going to be, could be a safe place. That could be safe. So, trade accordingly. Okay. That's Oracle. Let's go look at DocuSign. DocuSign is on the call credit spread list. It's showing that it is bearish. And we can take a look at it. I like to look. This is a weekly chart. But I like to look, let's go back to the weekly. I think we can maybe see some stuff. Lower lows, lower highs. Let's go to put us a trend line on here. Oop. Nope, not what I wanted. I wanted a trend line. There we go. Trend line. Okay. It does show that or DocuSign has a little bit of room to come on up to this trend line, but we can go from here to here. It's a lower low, but it doesn't seem like it's significant, but it is lower. This is a downwards moving wedge. Is Jamie on here? Jamie, is this one of those flagpole things? Flagpole and then the descending wedge. A little bit, it's got a little room in here, so it might go up a little bit more. DocuSign, we've got 58.59 as a call credit spread. 58.59 is up in here. Call credit spread 58.59. Jamie said that's what it looks like. Welcome to the seller zone, a play of comfort zone. Wrote a song like it, want to hear it, here go. Yeah. I was actually thinking of the one that welcome to the Terror Dome. I think that was somebody's rap song. So I thought about the Terror Dome, and then I made it welcome to the seller zone. But I could go with comfort zone. We try to be comfortable, but we do want this to not be stressful. So maybe we are trying to be comfortable. DocuSign call credit spread 58.59 puts us right in here. Let me put it. I do see some lines here I can put on. Right in here is some support. Actually, where we are right now is some resistance. Sorry, I called it support. It's actually resistance. Right in here where we are right now is resistance area. It came right on in. But this wick does, is a little concerning that it may want to go up some more. This line at the top is more like 60. Let me see what I know. It's like a 78 or 80 probability out of the money on the 58 strike because the current price is 56 and some change. All right, let's go to Zoom. Jamie, what XLs we looking at for the week? I was listening to a guy the other day talking about XL today. XLK, XL consumer staples is what? XLY? XLK, XLY, and I think he talked about XLE. Okay, Zoom is also on the bearish list. As you can tell, that part's kind of easy to see here. Boom, boom, boom. It's kind of going on down, down, down. Remember when I first started trading, I traded Zoom and got 8 up. But then Zoom was the first time I had a credit spread that I turned off one side, I bought back one side and let it go on down. That's probably the first trade I did that with. That was successful. I did that with Zoom because it was falling and falling some more. And my money was falling with it. Even though with the credit spread, you can't lose any more than the width of the spread. Okay. Zoom has 60.61 as strike prices. Where's 60? Here we go. Call credit spread 60.61. Call credit spread 60.61. That's what's going on with Zoom. Let me put some lines on it. I did some trend lines. I got to do the rest of the lines. Here we go. 59.19 is resistance. Right, you've got pivot points between current price and 60.61. That's Zoom. This long wick, though, again, y'all got the wicks, but this wick could really just push it on up to the trend line or to this resistance area. But these wicks do say that it wants to do some upwards movement. XLK is technology. Yep, Jamie says I'm only looking at RUT. All right, well, there we go. XLK is technology. I think XLY is consumer staples. XLY or XLC. Jamie knows. You do know what they are, though, even though you might not be trading them. You do know. I don't really trade Baidu. Baidu is showing up on the neutral list, even though this monster candle from Friday looks a lot less. Oh, this is a weekly chart. Why is it? Yeah. Okay, I was going to say that was looking. Okay, so we do have some gaps down here that are going to want to be filled on Baidu. Does anybody trade Baidu? Anybody trade Baidu? This has a little bit of a gap here. That's not all the way filled, or is it? Nope, not all the way. It's got a little bit left. Okay. Looking at this is supposed to be neutral. This not feeling very neutralish. What y'all think? Here's a gap back here that needs filling. This don't feel neutral. Because it's going to maybe go on up for that. Going up to that gap. The bottom of this gap is 105 and current price is 99. So 6 points. Even though this was a big red day, it could go really either way. It could go on down and fill the rest of this gap, or it could go up. Maybe that's why it's showing up on the neutral list, because these gaps will provide support and resistance. These gaps will provide support, and they'll basically provide like a barrier between them. But what I have here is 94.95 on the bottom. Put credit spread 94.95, which is good because the bottom of this gap is at 95.46. And I have 105.110. Now, this is something I want you to, if you're going to trade Baidu, I want you to hear me with this. Baidu, this one jumps after you pass the $100 mark. Baidu jumps to a 5 spread, right? So if you're going to trade it as an iron condor, then you're going to want to do at least 5 of these put credit spreads to balance off your money. But you also need to know that you're putting up $500 of collateral, take away, your premiums, yada yada. Or you can just do one side. Just because it says iron condor doesn't mean you have to do the full iron condor. You can just do one side. This PCS side is going to only be a 1 spread. So it's only going to utilize $100 of collateral. And maybe you wait later in the week if you want on the other side, or you just don't do it at all. Just do one side. All right. That's Baidu. Jamie says XLY is consumer discretionary. XLP is consumer staples. Thank you. Thank you. Thank you. Appreciate it. BP is on our list. BP is a 0.5 spread. We'll talk about some monster gaps. Did BP have earnings or something? What did y'all do? We had a gap here that is partially filled, but not all the way. Not all the way filled. I will put in, I try to do like the two charts. The 2 boxes, so you can see what part is already filled and what part is still waiting. Okay. And this underneath here didn't fill all the way either. So even though it's a little gap there, this from the Thursday to Friday also didn't fill. Not all the way. This is the part that's still waiting. It's not a lot, but it's still there. Okay. We got for BP, I've got 33.5, 34.5 put credit spread. PCS, 33.5, 34.5. Is that a 4? Nope. 4. There we go. Put credit spread 33.5, 34.5 is what's here, which actually puts us below this gap. Puts us down in there. And for the call credit spread, I've got 36.37. Oh, nope, didn't want that. I wanted this one. 36 is around here. Partway through the gap. Call credit spread 36.37. So how does that work? Y'all know I can put on my quartile. This was the entire gap. Was this quartile? Actually, I want that a little bit less prominent. It's like you overtaking the place. 50% of the gap generally is what people think, or what, happens. It gets filled about 50% of the way. 75% puts us at 36. So over 36. So this is how you end up with that being resistance, and then the top of it will be resistance also. Okay. I bet 36 falls right at the 69, whatever the percentage that goes along with Fibonacci's. Hey, Lorenzo. Hey there, that's BP. BP, we've got a put credit spread, call credit spread. If you want to do some oil this week, there you go with that iron condor. You can make it do what it do. Cisco. Cisco is next. Cisco had a gap here that looks like it got all the way filled as of Thursday and Friday, so we can take that off. I think we put that on there when we were charting this last week because Cisco was on the list last week as well. Okay, went right up to this resistance and pulled back. All right, see how all these wicks are touch. 47, and our Cisco call credit spread 48.5, 49.5. That's a call credit spread above all of the fray, right? If I could bring this actually in some more, but I'm gonna leave it where all these wicks are touching. I'll leave it like that. And the the put credit spread side is 46.5, 45.5, 46.5, which is down here. Okay. There we go with our iron condor on Cisco. Cisco's a 0.5 spread. So you really could make these 0.5s if you want to. If you wanted to not make it $1 or a one spread or $100, you can do it as a 0.5 spread if you like. Right? Reem says, hello, dear. Tell us about the SPX 500. Do you expect the cool? Well, you know, it is what it is. It does have a shooter on it. So a shooter could say it's coming on down a little bit more. It's time for it to cool off a little bit. It's been running hard. This is Panduo Duo. Panduo Duo. Look at the gaps on Panduo Duo. This one here is virtually filled. This one got filled back here. Yep. Alrighty. So Panduo Duo also on the neutral list. 137, 138 on the put credit spread side. $137, 138. Probably should move this up a taste because 138 is more like here. Okay, underneath this gap. The gap is the bottom of the gap is 140. There's also some support in this little slowdown area right here. Did I get that? I don't think I did. There's also something right in there. 137.96, which is right at the 138, right? There we go with that. Support, put credit spread 137, 138. Call credit spread 148, 149. 48, 149. That's 151 up there. Let me see by the line because that's looking like it's got something in the middle of it. In the middle of it. Something in the middle of it. Y'all see this? Some stoppings right in there. And there's another one. Oh, there's another one. And there's another one right there at 148.40. Okay, so there's a few of them. I changed it to a line chart so I can see a little clearer about what's going on here. What's going on? Want to see what's going on. So now I can put on here. Where we at though? Where they at though? There we go. Call credit spread 148, 149. Okay, so of what we've looked at, tell me what which ones are of interest to you. Which trades are of interest to you? We just did. I'm gonna put the whole list back up here again. Now, if you follow me on any social media platform, you've seen this list. If you're on my Facebook, if you're in Instagram, if you're on Twitter, if you're in Threads, if you're on TikTok, I don't think I put it on TikTok. but it's here. Which one of those are of interest? Which one of those catch your fancy? I'm liking Amazon myself, even though this week I've said I'm not trading anything that doesn't come off of this list or that trend spread bot list. So Amazon is here. So I may go with this. I'm still working on just one July. I had, what's it day? I fell off the wagon, but I think I'm back on it again. Which ones do y'all like? Which ones do you like on here? And you can say none. I don't like any of those. Jamie said he's focusing on RUT. So that's what he's doing. I've got Exxon, actually, the Peakbot, my trend spread bot, is working on Exxon, XOM for me, or Exxon. That's what's running. That's what's running there is Exxon. Okay, we've talked about the trend. We talked about the alerts. I'm going to swing back one more time to the credit spreads master class. The credit spreads master class. Okay. You want to know how to use these the alerts and or the list that I gave you. Then you're going to need to know how to work with credit spreads. Many of you do, but if you don't, you want to be a part of the master class. If you already do, but know somebody else that you think ought to be, or they think they want in, then, send them our way. All right. Send them the way, and I'll pay you $20. I'll pay you $20 when we send them. You send them this way. If they register based on your recommendation, we'll pay you. All right. We'll pay you. I'm thinking make sure I got everything off everything I wanted to share. Yeah. Y'all know we're on every morning at 8:30. Add to the stage. Every morning we're on at 8:30 on YouTube. We do a pre-market prep, right? Our Seller Zone pre-market prep. 8:30 in the morning on YouTube. We have our weekly training calls, which we're actually going to get on another training call, I'm thinking, in about 10 minutes. So those who are hanging out, about 6:30, I'm going to turn on Zoom. And then we have our monthly coaching call. Jamie knocked it out the park this month. Pew, pew, pew. He did the Q&A when I was off at my funeral. And, well, not my funeral. I was off at a funeral. There we go. I was not off at my funeral. I was off at a funeral. And Jamie took over the Q&A call, and everybody had grand things to say about how well it went. You said you're in Saudi Arabia, can't speak. Okay, yep. I used to live in Bahrain, and I can't speak Arabic at all. I can't speak Arabic at all, but I do think SPX may cool down a little bit. Okay. That's where we are with that. Be sure to like and subscribe to the channel. Watch your videos, join us in the morning. Make sure you like and subscribe, click your notification bell, hit your thumbs up, so that way you can be on here anytime I come on here. Okay. All righty, everybody. We will talk in the morning. Hasta mañana. I want you to stay green and get this money. Goodbye, everybody. Goodbye, everyone.